All right, welcome everyone. Before we begin the presentation, I just want to remind you that this presentation is not financial advice and I'm not a financial advisor. So any trades you take using these ideas, my indicators, or any education I provide are your trades and your trades alone. That being said, let's get started. We're going to talk through some of the changes made on the pivot ribbon since it was released May of 2022. And let's get right into it. So 2 major changes, 3 maybe if you want to count the first 2 as separate. But along the way, I added conviction arrows first, which are essentially the 1348 EMA crossover up and down. And also added the 1348 EMAs as plots to help with managing the trades. We'll talk a little bit more about why I did that and how those are important. And then, of course, this year, major update, the ability to shift the time frame for the full ribbon, which I call time warp. And it's an incredibly useful tool for me in trading. I'll have a whole extra video on that and how I use it for scalping SPX and SPY. But we'll walk through an example in here as well. And there'll be more discussion around different combinations and permutations of time warp and levels and time frames in the future, but we'll get you enough so that you can get going and get started with trading with it. Now, of course, you don't have to use any of these things. So if you like the way that it works right now, just keep using it. You don't have to use any of the new features if you don't want to. Time warp's off by default, so the ribbon should function exactly the way it has for almost a year or half a year. All right, so let's talk about the 1348 EMAs and the conviction arrows. They're really useful for managing the trade. So the 1348 EMA plots have been added. These are on by default. For a time they were in there, but you had to turn them on if you wanted them. Now I've turned them on by default because I use them every day. Typically, if it's default, it's something that I'm using. Often, if it's experimental, but I'm still using it, it'll make its way to becoming default. That's generally how I like to do things. Defaults are, for 80-90% of the people, and then there's enough settings to manage yourself if you want to make things more custom for yourself. So adding the 13 EMA allows us to take precision entries between the 8 and 13 EMA and trend. It also allows you to stay in the position. You can use that 13 EMA often as risk, or 13 to 21 zone as risk. If it closes below that zone, then you can exit your position. So it's helpful for maintaining your position in trend and not getting shaken out of your trade. And then adding the 48 EMA allows us to have a clear point where trend is likely to change if broken. And the 1348 the reason why I selected those 2 values is there's some research on this dating back to I think 2011. It talks about how they're statistically the best crossover, particularly on higher time frames. I think the study was done against the daily. So that's why those are selected. Of course, they're adjustable. You can change them however you want. You want to use 13 and 55, so it's all fibs. That's great. You can do that. You want to use change it to 50 and 200. Go for it. I won't stop you, and you're perfectly fine with doing that. So the crossovers I've also added when the 13 crosses the 48, when the 13 goes below the 48. And these can actually provide additional conviction and trend. So I want to make it clear, these are not buy and sell signals. If you do that, maybe on higher time frames it can work, like on a weekly chart. It could probably work if you're buying and selling stock. But they're really, hopefully you're buying at an earlier crossover or at key support or resistance. And then the conviction arrows are saying, hey, it's probably going to go in this direction, maybe. And typically it'll pull back after the arrow fires before it continues higher or continues lower. So not buy sell signals. And of course in chop, like any EMA crossover, there's going to be false signals. So you have to be careful with that. And again, you still want to trade the price action. The ribbon is just a tool helping you manage trend. It's a lagging indicator like all EMAs, so you got to be super careful as you enter and exit trades. So let's look at a day trading example. I'm using my ATR levels as well. These are the daily levels. This is from Friday. So you can see we started out here down at the put trigger sort of consolidating above the put trigger. And you can see the EMAs are really thin. So this is, classic consolidation chop, breaking through up and down through the EMAs. Finally, at the open, we had nice, decent volume to open the day. Got above our previous close. That's a bullish sign usually. Pulled back to the previous close and happened to be in the 8 and 13 zone. So right there actually could have been a pretty good entry if you wanted to go long, right? You're getting a move up to the upside. We've got this opening range that's set up. You could also take the opening range breakout if you want. That would have worked as well. There's plenty of opportunities to get in on pullbacks as well in that opening range. But pull back to this ribbon. Ribbon is bullish. Breakout and then breakout above the ribbon. The ribbon turns bullish, and they get a pullback to this key support, which is the previous close. Previous close is very, very important. That's basically showing you bias upside or downside relative to the previous day. So at this point, we're biased to the upside, and moving north, and breakout above the call trigger and gets to the next level. So if you got an entry here, you could have exited at the call trigger. If you saw this resistance here, maybe you wanted to take a quick scalp on it, that would have worked. If you're day trading and you're holding it and it never breaks, like it never closes a 10-minute candle below the 13 EMA, and it certainly doesn't close below the 21. So if this is your entry, you basically can hold this trade all the way. Goes all the way to the mid-range. That's a good exit for taking out some profit. You, of course, could scale. If you have decent size on this, you could be scaling out and scaling in along the way. But, the 8-13 zone, this zone right here, is providing you a place to basically stay in the trade. At no point does that 13 EMA break until the end of the day. And this is profit taking. This is classic profit taking in a nice bull run. At the end of the day, especially after a week like the one we just had, you're going to get a sell-off at the end of the day when people are taking profit, right? So it reached resistance, and of course you can see it's close to our 78.6 level. Didn't quite make it to 1 ATR, which is just above actually. But it turned into support and then it broke down, finally breaking and closing below the 13. That was, final exit. If you had runners, you could have exited there. In this uptrend, right? Higher high, higher low, higher high, higher low, higher high. Now we're breaking this low, right? So, and also you could have looked at the 21, right? Once we broke that, it was time to get out of the trade. But beautiful day trade all the way up. Pretty straightforward. 13.48 never crossed over. In fact, the 13 was staying above. I think it crossed over the prior day on the 10-minute, and it was basically staying above the whole time, giving you conviction to the upside as well. So, yeah, that's a good example. 13.48 never goes below the 48. Of course, after hours, we're just hugging it. But this 48 was, another place where you could kind of understand, hey, as long as we're staying above that, we're in pretty good condition, especially for taking longer expirations and you really have a strong thesis and you're just sort of managing things intraday. You shouldn't get shaken out of this trade. You should stay in it as long as it stays above the 13 and certainly above the 21, and then definitively above the 48 and 34. So I hope that illustrates kind of how all the new EMAs work together. So again, we've got the 8, the 13, the 21s in the center. You can turn those on. The 8, 21, and 34 is here at the bottom. And then you've got the 48 below. And of course, if it's red, if it's a bearish ribbon, it would be flipped where you'd have the 8 on the bottom, then the 13, then the 21, then the 34, then the 48 on the top. But the same concept. All right, swinging down and up with conviction. So let's talk a little bit about conviction arrows. So you see we got a conviction arrow here when Tesla was about 185. And you'll notice at this point, it just continues down. Now, that's not always the case. You will get conviction arrows that fire down, and then all of a sudden you get a conviction arrow that fires up. That can happen, and you'll see that frequently. So you have to be careful. But there's a lot of things lining up for Tesla here. We had there was a lot of noise about Twitter and a whole bunch of other things that were happening with Elon's time. But also, there was concerns about car sales and new entrants in the market and whether or not Tesla was going to be able to perform for this quarter, et cetera, right? So there's a ton of stuff piling on, and eventually led to the point where there was some capitulation towards the end of the month. Again, these are monthly levels. This is swing levels, so swing ATR levels. So these are monthly levels. And of course, we had that break of 180, and from that point on, if you look at this conviction arrow, it fires, and here's the pullback, right? We get a pullback. It never really stays above the 48. The bearish ribbon maintains for the most part. Comes back down. You could have entered basically at any of these 13 EMAs. Never breaks the 21 on the hourly. This is hourly with no extended hours. After this breakdown of this put trigger, and goes to -1 ATR on monthly levels. That's a massive move. I mean, if you had swung that over the course of 5 or 6, 7 days, and we had talked about it in chat, it was very, very lucrative. And of course, you could have allowed runners to continue, bottoming out here, and then of course we break the 21 finally. And then eventually, this is January, right? This is December here. This is January. We start to base here now at the put trigger for January. Finally break above the 48, and you can see we get a crossover, right? So there's the crossover, pullback, and then continuation. A little bit choppy here. You could have waited for a break and hold of the previous close, right? This is the monthly bias here. We want to stay above it to indicate that this month is going to be positive, right? If you were looking at a monthly candle. And, we get a nice move up and then a pullback, and then it basically holds this ribbon. We've been holding it this whole time, right? Massive short squeeze after the earnings catalyst, but it's effectively been holding this hourly ribbon. And it's never really broken down the 21 since we crossed above this long trigger. So good opportunity. Of course, you didn't have to get in there. There's opportunities also intraday to get in. If you look at the intraday ribbon, let's say at a 10-minute with day levels, you would have been able to get in on Thursday or Friday as well. So that's an example of conviction arrows on a higher time frame. Super useful. You should also check it with the daily, weekly, and even monthly. Can be really, really useful. But hourly with swing levels can often provide really nice directional moves. All right, so let's talk about time warp. Basic idea: candles on lower time frame, trend on higher time frame. So as everybody knows, I have a video on it. I have many videos. I talk about it all the time. I love multi-time frame analysis. Constantly reviewing multiple time frames. I look at the 3-minute, the 10-minute, 30, hourly, daily, weekly, monthly, all the way even down to the 1 minute. And I basically ask myself the question, like, all right, so the shifting time frames is not a new thing, but what if I shifted the entire ribbon? Like, what if I could see precision candle entries on like a 3-minute, but I can see the 10-minute trend, which is so useful to me. Instead of having to switch back and forth between a 3-minute chart and a 10-minute chart, now having to adjust my brain into thinking like, okay, well, where's that 3-minute candle on a 10-minute chart, 10-minute trend? I was like, all right, well, let me try shifting the entire EMA system. And so I did that, and I named it Time Warp. And effectively what it allows you to do, it allows you to achieve 2 time frames on a single chart. So you can enter a day trade using 3-minute candles, but use the useful 10-minute trend, which is so good for intraday trend. And what does that look like? Or actually, how do you turn it on first? So it's pretty straightforward. These are the settings for Thinkorswim. These are the settings for TradingView. So if you go in the indicator settings, it's just a time warp feature right here. It's off by default. You can set it up. So put yourself on a 3-minute chart and then set the time warp up for 10-minute. And what you'll get is something that looks like this. So we were talking about Apple calls earlier, right? So this is the 3-minute chart with a 10-minute time warp. Same thing that you saw before, where it was a 10-minute chart, and I was showing you entries on the 10-minute chart, but this you can get super surgical with, right? So let's say you break above the 13 EMA, above the 8, and it starts to hold the ribbon. There's a surgical entry. So that was that big that 10-minute dip that we had to the ribbon. That's shown right there. So consolidation, dip here, or you could have done the breakout of resistance, breakout of resistance there. Any of those would have worked, but you could have also bought the ribbon here and used, let's say, the 48 as your risk, or the 21 as your risk, whatever you want. Depends on, how your contract size is, which contracts you're selecting, etc. But you could have used any of these technical levels as a risk, even the put trigger if you want, or the low of the day, right? Low of pre-market low. Those could have all been valid risk for you, depending on what you selected. But look at this. I mean, it goes above the call trigger again, same daily levels, same exact levels as you saw before. Pulls back to the 13. So here's that 13 EMA test. Recovers the 13. That's a good entry right there. Any of these would have been good entries, and you could have held, use the 21 as risk, or the 34, or the 48, or the previous close. Like, there's so many ways you could do this. But great entry right here in the 8-13 zone. And of course, you can see what happens. It just takes off, goes to the mid-range, and there's plenty of opportunity at resistance to scale out position. Yeah, I mean, there's the 78.6 that we talked about. It sort of topped out. Then you have, a retracement back to the, again, this is the 10-minute time frame. That's why it looks jagged. So it's a 3-minute candles with a 10-minute ribbon, time warped ribbon. It comes back to the 13. Of course, if you're longer expirations, these are perfectly fine places to add. And of course, you could have scaled out again on 78.6, or you could have scalped it, right? If you had, let's say 147 calls or something, right? You could have scalped 147 calls towards the end of the day for pretty decent gains. Pull back to the ribbon, continuation, and then finally it breaks the 13 and we go south, breaks the 21. And that's the afternoon sell-off. So slightly different way of managing the exact same trade. Very surgical entries, very sort of zoomed in candlesticks, but you still get the beautiful trend of the 10-minute. And that's the general concept. We'll talk more about higher order timeframes, how to use it for swings in a future video. But I wanted to give you a general concept of how it works. You can mix and match and play some of the ones that I like, the 1-3 combo, the 3-10 combo, the 10-30 combo for like multi-day levels. Hourly, daily, weekly. Those are all really good combos of ribbon. You can even do things as wild and crazy as like a 110 or a 330. 330 can often work really well for extended price action that reverses. Usually you'll get a reversal back to that 30-minute ribbon. So there's lots of different strats that I'll be talking about throughout the year. Of course, time warp is new to me, just like it's new to you. I've spent some time with it in the end of last year, playing around with it, learning it, and getting better at it. But I will continue to develop more and more strategies and more based on the different combinations or permutations with ATR levels. But the general concept is basically the same as we've been talking from before. It's just noting that you have a trend on a slightly different time frame than the candles. And it can be really advantageous when you're trying to surgically enter and exit trades, particularly for scalps. I find that that's where things really get very fascinating, scalps and day trades. So I will have a separate video on time warp for scalping and day trading, SPX and SPY. And that's really it. That's all the updates for the pivot ribbon since last year. And we'll talk more about how to use the levels, the ribbon, and all the other indicators and tools that I use in future videos. But this should get you started with the 1348 and time warp.